Kunj Bansal is here to talk more about fundamentals. Kunj, afternoon, thanks for your time. Let's start our chat with ITC itself. Between the last year and this year, the first round of re-rating at ITC has already happened on the talk of the hotel business demerger, right? Now, the noise around how superior the FMCG end of the business is gaining. We are seeing that not only the smokes division, but non-smoke FMCG is also doing very well. Is it right to get into this stock once again for the next 1 year? The second round could start soon.
Yeah, I wish I had such a simple answer to such a simple question. Having said that, let's keep the stock aside for a moment. Let's start by focusing on a broader approach, and then maybe we'll come to where we want to reach. So we have seen repeatedly in the market over the last so many cycles. One, of course, we know that in the medium term to long term, ultimately any stock's performance is a combination of its consistently good financials, which should be there, and valuation. Now, within that, there are other factors, extraneous factors, which do keep an impact on a lot of sectors or stocks. Which could be some social causes, which could be some ESG, which could be demand and supply, which could be consistent buying or the consistent selling. So a lot of times it becomes difficult that the stock has impact only of financials and valuation. The impact of these extraneous factors also tends to take an impact, and which could lead to a sustained underperformance or sustained outperformance. Whenever those impacts are over, or the weightage of those factors is seen to have become too much upon the stock, the stock, of course, changes its trajectory and tends to move into the expected direction. Something similar has happened to a lot of stocks in the market over the years, and the same is probably the case here also. Now, going forward, what will happen, how much time it will take for any such stock, any other stock to perform. Let's keep in mind that in general, as Indian stock market, we are in a reasonably good net more buying instead of selling position. Now, in such cases, we have the continuous money coming in, mainly from the domestic investors and of course from the global investors. Now, if the market is of a scenario wherein there's a net inflow, that incremental money will always keep looking for sectors and stocks which will give good performance over a period of time. And which is where we will see the returns coming in from across the sectors and within those sectors across the stocks. It will be very difficult to pinpoint that over the next 1 year or over any particular time period, this particular stock will perform or not perform. Will be very challenging. One will have to keep monitoring the performance.
Kunj, just wanted to figure out, Kunj, I beg your pardon, wanted to figure out if there are any positions that you may have added in the recent run-up that we've seen in the market, or have you just waited it out on the sidelines and managed to ride the wave?
So if we very quickly try to look at, try to analyze the short-term market movement, we obviously know that in the last about 6-7 trading sessions, large cap indices have moved up 5%. And on each of those rising days, except 1 or 2 days, the indices have been hitting new life high every day. Before that, if we go in the last 1.5, 2 year period, we finally saw mid and small caps participating after having been underperforming for a period of almost 3 years before that. Now, when such a sharp movement of the market happens in a short period of time, it's very difficult to take a call. One can, of course, take a momentum-based call and get into the market at the high level. Let's also keep in mind that with every rise of the market, the risk-return equation tends to shift more in terms of more in favor of risk instead of reward, and vice versa. When we have markets being down or coming down, the risk reward tends to shift in favor of reward. So in a rising market, it will purely be either a technical based call or a momentum based call that one will be able to take, and that too more from the short term investment, short term trading approach. For the medium to long term investors, it's always better one to stagger the money for investing at different points of time. Within that, since you are staggering, you will get those opportunities whenever there are news flow based corrections or demand supply based corrections, the result trigger based corrections in the market, which will give you more attractive valuation than the valuation which one will get in a rising market. So those will be the better times to invest in the market.
Right, okay. Let's play out another interesting conversation. And India, the world's fastest growing major economy, pretty much on track to get to that $5 trillion mark by 2027 as India's journey towards economic expansion attains a global significance. Deloitte has organized the government summit, Arohana, that talks about the growth with impact. Let's hear out what the global central government leader, Gustav Jefferson, had to say.
Yeah, it's of course we have a lot of global tension, but I see that advisors like Deloitte have a special role in securing that governments work together on the right agendas for securing growth also in this situation.
Which are the global best practices that have been so far imbibed or maybe implemented in India?
Well, it's obvious that on the digital agenda, we have seen a lot of innovation on public-private partnerships that are very relevant in India, and we have also seen them in India. Then in infrastructure, there's been a large deficit in infrastructure in India. Looking back, that infrastructure boom that's taking place right now is very much based on an approach to public-private partnership that seems to work, and we're happy to support it.
And going forward, where do you see the cooperation, the overall collaboration moving from here?
Well, I see long-term partnerships based on trust, really, and I see that governments will work together in this, and I really think, coming from Northern Europe and the Nordics, that there is a mutual learning probability from the Nordics and India working together on both infrastructure and the broader digital agenda.
Right, okay, that's the take coming in on the India economy. But let's just take stock of what else is happening in the market. HDFC Life, Jindal Steel, IndiaMAR, ICICI Pru. Interesting list of movers out there. SBI Life, Bajaj Auto as well could be thrown into the list. Amongst the private banking names, it's largely Axis Bank only which is holding out. Now, ICICI Bank as well has softened. ITC is also pretty much lukewarm. HCL Technologies, Asian Paints completely flattened out. The Adani group of names as well cooling off. So yes, the pressure in the market definitely is building up. BPCL is now down almost about 4% as we speak. The other big story, of course, in the market is the sugar names too. Let's just revisit some of those stocks. They've surely been bearing the brunt of the government flip-flop which is happening on ethanol. And as we understand that today there is the meeting of ISMA as well as the Sugar Association as well with the PMO themselves at 5 p.m. today. So ahead of that meeting, you are seeing some of these sugar names still pretty much abated and under pressure. Besides that, by the way, PI Industries has now tanked about almost 10%, and I think at one point in time it also knocked about 11% in trade. Still pretty much in a free fall zone. 400 bucks really shaved off from PI Industries. And Ajay, now looking deeper into the news story, it seems that a very large chunk of their revenues actually used to come from that compound, right?
So, my reaction to this, Aisha, would be that we need to hear from the management.
Yeah.
Because though, yes, as far as the information we are aware of is 50% or 60% of their revenues is from this particular drug. But, what I am also getting a sense is that manufacturing of chemicals and supplies of chemicals is a regional play. Suppose I am a chemical manufacturer and I have a tie-up with particular regions, say Japan or Russia or US. My buyers will buy from me only. They'll not, because you are a Chinese company, tomorrow you started manufacturing that drug. Those guys will not start buying it from you tomorrow. So it's a complex, the buying and selling and manufacturing of chemicals is a complex business, and it is based on long-term arrangements and licenses, and it's just not as simple as it appears that just because a big Chinese player started manufacturing it, all the buyers, all the clients of PI will rush to that Chinese buyer tomorrow. So though, I mean, this is just my, very
Prima facie understanding,
rough
yeah.
understanding. I'm trying to gather more about it from experts in the industry, and we'll try to get you more about it. Management up till now has chosen not to respond. That is something which we should, kind of pursue a little more, because they'll be the best voice to come and tell. But I don't think there any company of that size. I've seen this company for 5,000 crores. It's 50, 60,000 crores in the last 10 years, right? I'm not so convinced that any company of this size will build their business model so fragile that tilted it
The
so
Chinese
favorable
competitor could
that tomorrow
take it
anybody
away.
could start manufacturing
Yeah.
that drug and the business model gets shaken. But I'll reserve my comments beyond that, and let's wait for the industry to talk about it. But meanwhile, what are the charts telling you? Where does the 200 DMA lie? All of that.
So 3,500 is the 200 DMA. The stock has broken below those levels already. And it's not as if that the stock has made a new low for itself. I think the last 2 or 3 months back, when the selling started off for PI Industries, the stock had made a low of 3,200, 3,250, I think, on the spot levels. So looking at that, we are still almost 200 to 20 points higher from those previous supports for PI Industries. So we'll have to wait out for a breakdown confirmation of this 3,200 odd mark for the stock to start to get into a serious kind of a downtrend.
Sure. Kush, I just want to get you in here, and not on the agrochemical space, but let's look ahead of that. Since you are of the camp who believes that the best of the rally for the year is already behind us, what's going to drag us lower if we were to fall further at an index level or at an overall market level?
Well, it could perhaps let me reiterate. I remember Ajay, summing up that comment saying that perhaps the best of the rally is behind it. What I mean is, the markets will perhaps see a correction of about 300 odd points, or should see a correction, but we would still be buyers on decline. So that's the first slight correction or addition that I would like to make to that comment. The rally is still intact. It's just a technical blip. Now that said, the likes of Reliance, HDFC, these are the stocks that have just actually begun moving up. So an immediate profit booking in these is not something that is warranted. Perhaps some big auto names, metals are doing well, and they've been doing well for a while. So perhaps some profit taking from those parts could drag the indices a little lower. And as I said, even if that happens, that'll be a healthy correction, even in the sectors that I just mentioned, and even on the index. So overall, we're on a very strong footing, but perhaps some correction in the auto names, some profit taking, even IT for that matter, that has been running for a while now, will not be a bad idea. So metals, IT, and auto, these are some of the names that could perhaps see some sort of a profit booking, and then again bring the index a little lower, which will be a very comfortable zone for everyone to re-enter.
Right. Okay, on that note, let me also take in some BTST trades. Kunal?
So I'll go with a couple of buy calls on the PSU names. Hudco, for example, was something which we discussed in the morning. The stock had broken past about the 96, 97 mark. So would retrade a buy with a target of 106. Stop loss could be trailed down to 95 now. And IRCTC is the other stock which is inching towards a breakout. So I think 765 is the breakout point for IRCTC. Looks attractive from that perspective. Targets of 805, stop loss 755.
Right. Kush, would you have any BTST trades?
A couple of them. One is a cash stock, TexRail. The entire space is doing well. TexRail is just above its resistance zone and holding up. So looks like a good buy from here on as well. 161, 164 are the targets. 153 is where I would place my stop loss. One addition to the BTST list is Pidilite. Pidilite is something that has been a beneficiary of the crude fall, could do well in the near term because of that reason, plus a technical bounce back on this one. So 2650, 2680 are the levels that we're looking at, and 2560 is where I would place my stop loss.
Okay, that's Pidilite for you. Asian Paints and Pidilite both are very big beneficiaries of crude oil prices coming down, and so are Cement Pack. Kunj, Cement Pack is buzzing for last few days on, of course, the M&A buzz, and also beneficiary of fuel price cut, etc. Volume growth buzzing once again. Which are your favorite ones in the Cement Pack?
So to add to the reasons that you mentioned, let's also add highlight the fact that we are heading into general election, and just before general election, all the governments are known to go heavy on capital expenditure. The current government has already been staying heavy on capital expenditure, partly to meet out the slowdown that was there in the economy and partly anyway as a long-term sustainable growth. So that is something that will continue. Now that has resulted into cement demand remaining reasonably positive. Of course, in between there were issues around those because of the seasonal reasons. The good thing that has happened is that the raw material prices have corrected a lot for the sector as a whole. So that's benefiting almost players across these sizes, smaller capacities, medium capacities, and larger capacities as well. Pricing discipline is something that industry always tries to do. Sometimes it is able to hold, sometimes it's not able to hold. But I think the overall scenario is such in which overall the things are right now in right place for the industry, except the sharp price movement which has already happened on the upside, leading to the valuation uncomfort at current point of time. So any correction would be a far better time to look at the sector in terms of the medium term investment positions.
Right. Okay. Well, we will soon get some commentary in, and we are understanding exclusively from Mr. Rajneesh Sarna himself, who's the Joint Managing Director at PI Industries. He's exclusively spoken with us and given us his comments on this entire news story. He's saying that the news is speculative. This is not anything new, and that this particular product is a patented product in most of developed markets. He's saying that Chinese players announcing capacities will not make any difference. We will have those flashes very quickly, and we'll have Lisa, a research analyst as well, mic up, because she's the one who had a word with the management, or perhaps Somit as well, to try and get us more as to what exactly the management told them. And remember, this is in contrast, or rather in respect to buzz around one of their key products wherein competition is intensifying, and that one of these multinational crop protection companies in China called Rainbow Agro, which has received an approval for an annual production capacity of 2,000 tons. And apparently they've completed their 1.0, 2.0, 3.0 product registration plans already, and that this is the third Chinese company announcing a capacity for this particular product. Now, there was rumor in the market that PI Industries gathers 50% of their revenues from this particular product, but the management very categorically saying that this particular news is speculative. However, what we don't know is what is the revenue contribution from this particular product of theirs. He's saying that, you know, this is nothing new. This is a patented product in most of the developed market. Chinese players announcing capacities will not make any difference. You can actually see a bit of a recovery, if you will, on the stock price, but nothing meaningful. And that the developed market product will remain patented till 2025. So basically
Japan
saying that
is
it's not
market.
going to...
So Japan is the developed market we were talking about. Kunj, you know, PI Industries business model in the specialty chemical and agrochemical space, you know, appears very fortified. They have not built it overnight. It's built over decades. It's like a fortress. Some company coming tomorrow with the same kind of product cannot just start manufacturing and take away the market share. The point which you were earlier saying, if you could have the quote plate or Lisa, who's gathered that, will be very good, because 2 minutes before and it could turn out to be a BTST, a case of a BTST as well. All right. So this is. Let me read out the quote plate once again. Mr. Sarna says this is not anything new. Number one, nothing new. This is a patented product in most developed markets. Chinese players announcing capacities will not make any difference to the business model. Developed market products. And remember why they are calling developed market products? Because PI products go to developed markets like Japan. Japan is their biggest partner. So that's something to watch out for. With this details on the table, Kunal, would you attempt a BTST in PI, or would you stay away? This is a risky trade, might as well ignore it.
Yeah, I think it's a risky trade, might as well ignore it. I think, Ajay, if you ask me, because the stock is still trading below its key long-term moving averages at current levels. So maybe wait out for one more day of confirmation and then look to go for a fresh buy.
All right, wait it out. You may get opportunity to get into this stock tomorrow, but the stock market meanwhile is winding up 100 points lower, 29 rate, it's still maintained.
Absolutely, shutting shop at pretty much around the lowest point of the day. So it's really been a day of consolidation. We've almost had 100 point from the top of the day. About 0.5% downtick is where we're shutting shop for the day. But let's see tomorrow's another day. We'll pick it up then. All the market action tomorrow morning at 8 a.m. For now, it's a goodbye from all of us.